Is your income over $100,000 filing as an individual or $200,000 or more filing as a couple? If so, this is an important video for you to watch to understand the options that you have to not overpay for Medicare. So in this video, let's talk about what the rules are for you in terms of when you have a high income, how does it impact your Medicare costs, and what can you do about it? I'm Emily with the Medicare Coach, an independent Medicare consultant, helping our clients easily navigate both Medicare rules and insurance company options to do what's best for you to both protect your healthcare options, but also your retirement savings. If you want extra shortcuts to Medicare, I have in the comment section below some extra resources to give you a jumpstart and a shortcut to Medicare. So for those of you who have a higher income, you are subject to what's called an IRMAA penalty, an income-related monthly adjustment amount. And as I film this video, it basically says that if your income is over a little over $100,000 a year, filing as an individual, or $200,000 or more filing as a couple, you will pay more for Medicare. Now, if you are married but filing separately, your income threshold is around $100,000. So if you have an income over this amount, you're going to pay more for both your Medicare Part B as in boy, as well as your Medicare Part D as in drug. Now, how it works is this, is that Medicare looks at your income statements, your modified adjusted gross income amount from 2 years prior. So in 2025, Medicare will look at your 2023 income. In 2026, it will look at your 2024 income. So Medicare looks 2 years back at your income. And if it's over the set threshold for that year, you will pay more for Medicare. So the best way to know if you're paying more for Medicare is by one, looking out for a bill in the mail. Now, don't be surprised, Medicare will oftentimes send you a bill initially for the base amount, and then a few days later say, oh, whoops, your amount is actually higher because of your income. That's one way to figure out if you're gonna pay more for Medicare. The only other way to know if you're going to pay more for Medicare is to log into your Medicare.gov account. And inside of there, they will have your monthly premiums. And if it's higher than the base amount, you know that you're paying more for your high income penalty. So what can you do about it? Medicare does allow you to appeal these high income penalties if you have a qualifying event. So what is a qualifying event? A qualifying event can be things like, they tend to be things like work stoppage, work reduction, or the loss of a spouse. And so if you have one of those qualifying events, you can ask for the government to review your new income and adjust your penalty down. Now, in order to do this, you're gonna have to fill out a form, tell them who you are, your reason for the request. Again, did you stop working? Did you reduce work? Did you lose a spouse? And what your new estimated income will be. And based on that, the government will review it and approve it. We tend to see with our clients that almost everyone gets approved if they have a qualifying event. We have seen people who have done things like Roth conversions or taking large amounts of money out of their 401k plan that they're not always approved for. But if you have a qualifying event, you can appeal this. The most important thing though is this, do not just wait for the government to eventually adjust your income. I want you to be proactive when it comes to appealing these penalties because you can save over $6,000 a year in many situations if you actively appeal the income penalty. So please be proactive, understand, does it apply to you? Do you qualify for an appeal? And if so, submit that appeal to save yourself money. I hope this is helpful for those of you with higher incomes, and to learn more about shortcuts to Medicare, make sure you find the resources down below and join me in one of my free workshops to make your life easy when it comes to Medicare.